Michael Collins of the Rational Speculator. And with me today is Martin Turenne, President and CEO of FPX Nickel Corp. FPX is a major holding for us at the Rational Speculator. Welcome, Martin.
Hi, Michael. Thanks for having me on.
So could you give us a very brief overview of FPX, just for people tuning in for the first time?
Sure. So FPX is a Canadian company listed on the TSX Venture Exchange. We're focused on the advancement of a very large nickel deposit in central British Columbia. The deposit is called Baptiste. It stands as one of the largest undeveloped nickel deposits in the world. And a recent preliminary economic assessment suggested it could be a very large mine, one of the 10 largest nickel mines in the world, with a mine life of 35 years, with projected operating costs below $3 US a pound. So it'd be one of the lowest cost operators as well. So it's something we're very excited about continuing to push forward.
Mm-hmm. So currently the market cap of the company is about 6% of the Baptiste Project's net value. Peer companies are typically trading 3 to 4 times that, and some are even trading higher. The company's well-financed, it's located in a great jurisdiction. Nickel price is trending upwards, it's great leadership. The company management directors have skin in the game. So what do you think is holding back the share price?
Yeah, I think there's a few things I would mention on that. It's a good question, certainly one that we ask ourselves all the time. There's a couple that would call market related, and then maybe one that would refer to as being kind of project related. On the market related side, listen, the company has had a pretty good year in terms of its share price performance. It has, the market cap has gone up by, approximately 6-fold over the last year. And I would suggest that, over the last couple of months, we've just been kind of taking a breather in our share price and hopefully setting the basis for that next leg up. I think there's also a perception, which I think is a mistaken perception in the market, that a project like this is too big for a junior. And we acknowledge very much that this is a major company scale project with a fairly considerable capital cost associated with it. And I think sometimes there's a view in a market where if a junior is holding a very, very large project like this, it doesn't have a feasible path to financing, and so therefore doesn't kind of get the valuation it should. We're very clear that the corporate strategy here at FPX is to de-risk, add value, advance the asset, and that ultimately will be taken out by a major company. That is the corporate strategy. At the project level itself, I do think the project is viewed widely as having fairly moderate grade in a novel style of nickel mineralization. So there is an element to our work here of having to overcome the kind of the grade is king mantra that is out there. We really try to get people to focus on the fact that margin is king, and margin is a function of grade, yes, but in our case, despite the fact that we've got fairly moderate grades, we have very low mining costs based on the fact that this is an open pit with a very low strip ratio and very low processing costs. So all told, despite this having a moderate grade, this can be a very low cost producer. In fact, sit within the bottom quartile of the cost curve for the global mining industry. So part of this is, I think, a market phenomenon, and part of it is at the project level, continuing to de-risk and advance and to demonstrate that something that does have moderate grade can be highly economic, in much the same way that the porphyry copper deposits are also oftentimes moderate grade, but they can be the actual workhorse of copper production and very low cost producers. So drawing that analogy in the market to those types of deposits, I think, is something that can help us to redress that imbalance in our valuation.
Mm-hmm. No, it makes perfect sense. That's great. So the Baptiste deposit is going to have a very low carbon footprint and a low pollution profile. Could you talk some about that?
Yeah, for sure. It's something we're very focused on. We talked earlier about the fact that the project can sit very low on the cost curve, and this kind of shows where our project can sit on the cost curve, which is fundamental, I think, in evaluating any mine project. Where projects sit on the carbon curve, I think, is going to start to become more and more important, particularly for commodities like nickel that are part of the electrification movement, that form a huge part of the electric vehicle batteries. So the fact that we can produce nickel here with a very low carbon footprint compared to most nickel production globally is strategically very significant for us. You know, the mining business and the nickel business in particular is by its very nature very high carbon emitting. And so the fact that we've demonstrated here that we can have a very low carbon footprint against the peer group of other nickel producers is significant. Beyond that, we have very unique mineralogy that means that our tailings material will be benign in nature. And rather than deal with the acid generating tailings that is common to sulfide nickel deposits, our tails will actually be acid consuming. And so the benign nature of our tailings is also something that's very important from an environmental footprint standpoint. And beyond that, you know, our processing facilities will be based on hydroelectric power here in British Columbia, which is not just sort of very low carbon in nature, but also very low cost, and one of the keys to unlocking, you know, the potential for very low cost production here.
That's great. So moving on to the next question, what catalysts do you see occurring this year which will move the company forward?
Yeah, there's really sort of a dual track strategy that we're very excited about pursuing here in 2021 for FPX. The first is taking the main project, Baptiste, which is the advanced deposit that we have in our portfolio, the one for which we've completed the recent preliminary economic assessment, and moving that project forward into the preliminary feasibility study phase. That involves a whole host of sort of fundamental de-risking activities that we'll be sort of checking the boxes on this year as we march towards that pre-feasibility in due course. And these are sort of the critical de-risking activities that I think will facilitate us towards working to that ultimate objective of an exit to a major company, particularly as it pertains to the metallurgical test work, proving up that the flow sheet that we've developed for the PEA is robust, and doing larger scale metallurgical test programs to demonstrate that. There's also some really interesting opportunities in that metallurgical testing to potentially monetize the iron and the cobalt that we produce here. So the existing economics are based solely off of the sale of nickel. However, we do see the opportunity to sell, potential to sell a lot of iron and cobalt from this deposit as well, which could dramatically improve economics. So a lot of really good fundamental work to move Baptiste into the preliminary feasibility study phase. However, beyond that, the part of the story that we're probably the most excited about is the exploration and discovery potential that we have at our Van target. So the land package that we have at Baptiste covers a very large area, about 245 square kilometers. It really is district scale in its nature. We've defined a very large deposit at Baptiste, which stands as one of the 5 largest undeveloped nickel deposits in the world. We've never drilled at this Van target, but all of the geological indications that surface there are that it could potentially be larger and or higher grade than Baptiste. So we're doing our initial drill program at this Van target this year, and we see the potential for another major world-class nickel discovery there. So that's something we're quite excited about, and it certainly could suggest a huge sort of catalyst for the company, and a huge value driver if indeed that drilling proves to be successful. So that's something that should be getting started in just over a month from now, and something we want people to be focused on for sure.
Well, the next couple of years look very promising and exciting for FPX. We're very happy at the Rational Speculator to be a part of the journey. We expect it to be very fruitful. Is there anything else you'd like to discuss before we wrap up the interview?
Yeah, just coming back to one of the points you made earlier. I mean, we've recently completed a financing. We have over $20 million in the bank. So we have a very long runway. We have a runway of at least 2 years now to be able to execute on a whole host of sort of value driving initiatives. So we'll have a lot of milestones, a lot of news flow over that period of time, and it's all fully funded. And so we'd expect that to translate into good sort of open market buying for the company. And importantly as well, management and the board has a large, significant ownership position here. Just under 19% of the outstanding shares of the company are held by management and board members. And so that really speaks to our fundamental alignment with all shareholders in terms of driving value here at FPX.
Yeah, that's great. Well, if you'd like to find out more about FPX Nickel, you can check out the website at fpxnickel.com. And if you'd like to find out more about Rational Speculator, you can check us out at rationalspeculator.com. Thank you very much, Mark.
Thanks, Michael.